While it seems like you're saying no a lot, you're actually saving yourself a lot of wasted time in the long run. Ultimate clarity is step 2, and it's one of the most important. Welcome back to the channel. My name is Brian Forrest here with Deep Blue Capital, and today we are talking about how to buy your first apartment complex. This is going to be a good one. But before we dive in, make sure you hit the subscribe button, notification bell, and then go on over to deepbluere.com, create your investor profile, learn about our upcoming investment offerings, a whole bunch of other educational content, all sorts of good stuff on there. Today, we are tackling an exciting topic: how to buy your first apartment complex. Whether you are just getting started or you're a seasoned investor who's been doing this for a little while, stick around because we've got some great actionable tips for you. So let's take this step by step, starting with step 1 to buying your first apartment complex. That is getting educated. Buying an apartment complex, make no mistake, is a massive investment and it is a pretty large undertaking. I will be candid, once you get the hang of it, you understand how deals are done, you understand how to build out the systems and processes, you understand how to find deals, underwrite them, finance them, and get them to the closing table. It's really not any more difficult than buying a single family home, but that first time, there is going to be a lot to learn, and you do not want to be learning it on the fly when you have a lot of money on the line, especially when sometimes you have a lot of other people's money on the line. So get educated. Get every book that you possibly can. Go to seminars, listen to podcasts like the More Doors podcast from Deep Blue, and make sure that you know everything that you possibly can before pulling the trigger on your first deal. Learning and education are like a second job to real estate investors. You must be working just as hard on learning how to do deals as you do on finding them and getting them done. Otherwise, you have a tendency to rush things, force things, and do really bad deals. And enough really bad deals, and you'll no longer be an investor. That is the risk that you run. So take great care to find every resource that you possibly can to get educated before you undergo the process. That's step 1. Step 2 is to define your investment criteria, or as we in the biz like to call it, your buy box. What kind of apartment complex are you looking for? Size, location, age or vintage, asset type, right? Are you looking at student housing, senior housing, 80s, 90s, 2000, Class A, Class B, Class C? Are you looking at a major market, a sub-market? These are very, very, very important questions to answer before you do your first deal for a couple of reasons. One, because finding deals is hard. It's a lot of underwriting. It's a lot of going through offering after offering after offering, deciding if this one's even worth looking at, taking to the next level. If I have to do that for hundreds and hundreds of deals a week, it's going to be very time consuming, and I'm going to get a very low return on that time because I'm doing way too much work for very little that's coming out the bottom of the pipeline. What would be way better is if I got really clear around what I wanted, where I wanted it, and what I was willing to do to get it. So defining your criteria and understanding from step 1, your education, the implications of what comes with each of those criteria is truly important. What is it like to manage a Class A property as opposed to a Class C property? There's going to be much more operational intensive things that you're going to have to do, right? But the upside could be better. What you're comfortable with, what you're willing to put into the project, the areas that you believe in, your investment thesis behind certain asset classes, all of that is going to come with your step 1 education. But don't go out there and just try to hammer every single deal that you possibly can. Get really clear on what you want and get really good at saying no to things that don't fit your buy box. I promise you, in the end, while it seems like you're saying no a lot, you're actually saving yourself a lot of wasted time in the long run. Ultimate clarity is step 2, and it's one of the most important. Step 3 to buying your first apartment complex is to figure out your financing. There are many ways to finance apartment complexes. One, buying them cash. You got all sorts of loan products. You can do syndications. There's a lot of different ways that you can finance multifamily assets. Having a plan around how you're going to do that before you even go into the process of making an offer is crucial. The last thing that you want to do in this business is go under contract or get to LOI stage and not have a plan for financing. If that deal falls through because you didn't have a plan on how to finance it, good luck getting another deal from whatever that source was that gave you an opportunity on that one. The first thing that you want to do is meet with your local banker. Tell them what you're trying to do, share with them your criteria in your buy box, get their insight and guidance on the best way to finance assets like that, give them what they need as far as your financials, get as far down the rabbit hole on financing as you possibly can. Or if you're looking to do larger deals right out of the gate and you have a great network of people that you want to share this wealth building opportunity with, you may consider the syndication route. If that is the case, not only do you need to look at lenders, you need to look at your legal team, the people that are going to be helping you file your securities, creating your syndications doc, doing all that work in the background. That's the route that we go at Deep Blue Capital. We do mostly multifamily syndication. That is our preferred financing strategy because we like to share the wealth building opportunities with our community. Getting ultimate clarity around how you're going to finance your project is crucial before you ever go under contract. So step 3, make sure you have your financing clarified. Step number 4, now that we have our financing at least clear on how we're going to finance these things, it's time to start looking and finding deals. These comes from all different areas. You can go direct to seller, from brokers, on the MLS, on places like LoopNet or Crexi, a lot of online listings. There are infinite ways to find deals. Whether you want to go and call sellers directly, send them direct mail, other marketing types where you're going straight to the owner, that's one way that can work mostly for smaller assets. I would say under 75 units is a great opportunity for you to go direct to seller. Anything over that, you're probably going to be working with a broker of some sort. So a lot of finding deals is finding brokers, lead generating for broker connections, calling the brokers in your area, talking to them about your buy box, getting in a relationship with them, and making sure that you're on their mailing list so that when deals that do fit your buy box become available, you know about them. You've got your financing strategy clarified, and now we can move to LOI phase very, very, very quickly. So networking with brokers, going direct to owner, whatever your strategy is going to be, step 4 is to start getting incoming deal flow through those actions. Step number 5 is deal analysis. Now that you've got deals coming in, you've got to be able to analyze them and decide whether or not they're even worth looking at. If they are worth looking at, what your preferred offer price is going to be and how much you're willing to stick to your guns on price and what you're willing to do to get that deal done. This goes back all the way to step 1, where you're going to use your education to underwrite these deals at a basic level. You're going to get the financials from whoever the source is, whether it's the owner or the broker. You're going to plug them into a model that you've probably found during your research on how to underwrite deals. And I'm going to say one more time, you're going to be realistic about your underwriting model. Investors get killed when they try to force a deal that's not a deal to be a deal. I said the word deal a whole bunch of times there, but that is the truth. Especially on your first go around, we have a tendency to try and force the numbers to work for us instead of being comfortable saying, I can only do this deal at this price. You need to understand that you're going to say no to a lot of deals in this business. You're going to say yes to very few. Those no's will save you a lot of heartache. The yeses are the ones that will reward you, and they're going to be few and far between. So when you are analyzing a deal, pulling the financials, looking at the operating expenses, the income, comparing the two and finding where your opportunity is to streamline operations, improve efficiencies, create this deal and make great returns, Be realistic. Stick to your education. Find a mentor, find a coach, find someone who's done this a whole bunch of times that can help you underwrite your deals, criticize and give you feedback in a positive way, and make sure that you're keeping yourself honest with your deal analysis, because this is where you can get killed if you're not really underwriting honestly and sincerely, and you're trying to make a deal out of a deal where there isn't one. So analyzing is step number 5. Step 6 to buying your first apartment complex is going to be making offers. And by the way, you're going to make quite a few of them before you get your first deal. Be comfortable writing up your letter of intent, submitting it to a broker or a owner, whomever, and waiting and following up and nothing happening and following up. And a lot of time goes by and they might sell it to somebody else, but you're going to submit more on the next deal. Making offers is step number 6. Work with your legal team to create a great letter of intent template that you can edit and make specific to each deal, and be willing and ready to pull the trigger on offering a letter of intent when the deal makes sense for you and at a price that it makes sense for you. And that's usually, by the way, going to be at a lower price than the broker is asking for. Don't be afraid of that. Just be ready to defend your deal analysis and why you're offering a certain price. If an owner wants $10 million for a property and you're willing to offer 8 because that's what your model says the asset is worth, be willing to jump on a call. Walk them through your underwriting strategy. Show them how you came to your assumptions and conclusions. And you'll find that more often than not, even if you don't get a deal done, you develop a relationship. So 6 is making offers. Be prepared to make quite a few of them and be prepared to act when you get one accepted. Number 7 is going to be closing on the property. This is going to be different for the different types of deals you're doing, different types of financing you have. If you're syndicating the deal, this is really just where the real work begins. You're going to start raising capital now, working with your legal team to get syndication docs out, doing a webcast, all kinds of crazy stuff. If you're financing simply through a bank, this is usually a relatively straightforward process. You're going to do your due diligence. You're going to negotiate any sort of concessions or repairs that you might need to with the owner, and you're going to get the property to closing. And congratulations, you're now the proud owner of an apartment complex. But there is one more step after that. Step 8 is managing your property. Here is the big difference between multifamily and apartments and a lot of other investment strategies. Even if you have a property manager, which you likely will on most larger assets, you still have decisions to make. You still have the asset management side of things. These are long-term holds normally, and you're going to have a whole cadence of decision making that you're going to have to undergo on a weekly, monthly, quarterly, yearly basis with your assets. So make sure that in your research and your education, step 1, you're learning how to operate multifamily assets, operate apartment complexes. Your property manager is going to be your right-hand man or woman when it comes to that. They're going to give you a ton of feedback, a lot of data, and a whole lot of things to go off of, but ultimately you make the decisions when it comes to managing your assets. So in your education, don't just learn about how to buy an apartment complex. What's more important is how to manage one efficiently so you get the greatest returns for you and your investors. There you have it. Buying your first apartment complex is a significant step on your investment journey. With the right guidance, with the right network, with the right coaching, and with the right confidence, you can do it many, 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 many times. And once you get that first one done, they get easier and easier and easier. Every one of those 8 steps is important, but the most important thing is to just get started. Don't get stuck in education mode for too long. Continue to move forward. Take action, take the next step, and your journey, it will just start to unfold before you. Appreciate you watching. I hope this video was helpful. If it was, make sure you hit the subscribe button. Visit us at deepbluere.com. Create your investor profile. We'd love to learn more about your investment goals. And there's a whole ton of educational content on there that help you with step 1 and beyond. Appreciate you watching. We'll talk to you soon.